Good afternoon, everyone, and thank you for joining us today. I'll just do a quick sound check. If you can hear me, please let me know. Beautiful. All right. Now, just give me one moment. Just setting up. Ivan is not joining us just yet. He just texted me in to say he's stuck on a call. He's trying to buy a company at the moment and dealing with some liquidators, I think. Anyway. Probably revealing more than I should. Beautiful. All right, guys. Well, thank you for joining us. Interesting sort of a market at the moment. Let's just, before we get started, any advice contained in today's presentation is general only. Doesn't take into consideration your personal circumstances. You need to decide for yourself whether it's appropriate to you. Past returns are not an accurate indicator of future returns, and options are risky. You need to know what you're doing. All right. So today's session, we're going to have a little bit of a squiz around the market. I have asked, let's have a look, who is online, and by all means put forward any trades and how you're trading the market at the moment. I have been trading basically this range that we've been sitting in, which I'll bring up here, since last week. And really the week before, so I haven't really done anything too much different. Bear calls, bull puts, yeah, we're seeing a bit of volatility come out of the market, which is good, and I think what we can start to look at with interest is some of these long straddles going into reporting season, with the vols coming off. So some consolidation I think will be good. And then that will lead us nicely into a couple of trades around some long straddles into reporting season. So we might have a look at that in a moment. But what I might do is just take a quick poll from everyone that's online. Is anyone bullish? Is anyone bearish? Does anyone think it's going to go sideways over the next week? What's the view over the next week? So from now until next Thursday, what do people expect going to happen? Up, down, sideways? Please put it into the chat box for me. All right. All right. So keep typing those in, and I'll give us a summary in a moment. Now, as far as the market's gone, we've seen this grind continue sideways. We did look at Afterpay last week as an iron condor. That's been an interesting one as well. We've seen volatility come off, and really my approach has simply been bear calls up here and bull puts around down here, and not really wanting to stay in trades for very long. Between this point here and this point here is 300 points, so it doesn't look like much, but a 300-point move is plenty to be able to, with some room for error, be able to move both sides, right? So that's pretty much all I've been doing. There are no leads in terms of breakout trading at the moment because well, there just isn't. So there's nothing that's sitting there today. But even if there were, repairing those trades at the moment is a bit tricky. All right. So okay. So let's have a look. Someone was asking about a long straddle and oil search. We'll have a look at that in a moment. But just as a summary, we've got, out of people that have put in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 are sideways, and another 2 or 3 are down and 2 are bullish. So overall, general sentiment is sideways for now, and that's where I'm sort of sitting in that camp. But I do expect we will see downward movement, and as Ivan said, there could be a short squeeze at some point in time as well. So there you go. We covered some territory in a comment there. All right, okay, so Edward said, CommSec has disallowed sell to open transactions. Do you allow them? Yes, we do. We don't allow naked positions, but as long as it's covered on the other side, either with cash or with stock or with a bear call or a bull put scenario, you can sell to open on our platform. So that's interesting. I have heard that around the traps and we have had quite a few people contacting us from CommSec recently, Edward, so I hope that answers your question. All right. So let's go and have a look at Oil Search. So I don't have Oil Search in here. All right. Okay, so someone's asked the question about Oil Search, USA, Russia and Saudi in talks tonight. All right, what about a long straddle? All right, so let's go and price that up. I will note that volatility could be higher, but it is high, although it's, you know, I don't know what that looks, I'm not sure what that means. I think it's probably come off and stayed there. I'm not sure what that little drop down there means. So let's go into the strategy builder and price this up. OSH. All right, so volatility has come right off. So if we have a look at a month, let's have it over 3 months, okay? So it's come off and it's raised back up a bit today, but maybe that's ahead of the talks that are on tonight. So let's look at a long straddle. Long straddle, to expiry day, it's not ideal timing. I'd usually like about 30 days with something like this. If we were going to trade it off the talks tonight and purely on that, we could do 14 days or 49 days. So we'll start with 49 days and then we can always bring that back. So premium 36, let's put some quantity in there. All right, so you say maximum loss here, and we will bring in, put into a price matrix, which if we get a volatility increase by 20%, tomorrow, it probably won't be too far off. So if you're expecting volatility may go up, but it's probably going to be going up. My comment to the person looking at Oil Search is that it's probably going to go up. It's probably already gone up today. So on the expectation that these talks are happening, it's probably jumped up. But just this volatility data is looking a bit wacky there for me, so I'm not 100% sure that yesterday's data is correct. I think it's probably gone from here to here. So maybe we might see some fireworks out of that. And if that was to be the case, then we might see Oil Search up at 120, 140, something like that. So if you were right about that, you adjust your volatility up 20%, you'll see a move. If it was to go up, say, by 40%, there's your move there. If it was to come out of those talks and it was to decrease, you know, that you can see what you're looking at there. So I'll probably use today's date. There'll be a little bit of time decay in there. So based on that trade, if you wanted to go long vol, you could sort of that's the trade you could do if you have a strong view about that. I might get a reporting date on ANZ. Does anyone know ANZ's reporting date? I've just slipped my mind. Now we had Brian Corman on the session the other night who shared his rules around trading into reporting season and using long straddles, and if the recording is on the morning report in the newsletter we send out each day, and we'll be putting it up on the web. I think it's on the website already. So if you're wanting to look at trading and some rules around trading into reporting season, there's some good. So it's the 29th of May. Chris, is that right? right? I'm not sure. Yeah, April. Okay. All right. So let's have a look at ANZ. So if we've got ANZ's volatility is obviously relative to where it's been recently is on the high side. Let's go back a year. And it's come off, but we expect that going into reporting season, it can come back up significantly before it goes into that. So if we wanted to price up a long straddle, we can price this up here. All right, and that will give us, so what we're paying per contract, so maximum loss 266. We can increase that, let's say by 10. And we might just expect the share price moves around a little bit. Now we're taking this out to the 25th of the 4th, and I believe that the rules would be to close on the, if it's the 29th, we'd be closing on the 28th. So this next date being the 25th, it would be a couple of days after then. So if their volatility moves up by 20% in the short term, there's an opportunity to take a profit. If it goes up by 50%, which would probably be more normal, there's the possibility for someone who's going in on a risk max loss of $2,665 of pulling a decent profit out of it. Now, the thing is that when you do go into these trades, and hi Brian, just come onto the phone, onto the line, the thing that we like about a straddle is that we can close, the risk that we're facing is the time decay that occurs. So when we go into the position, if we're taking 49, an expiry day that's going out 49 days, then you can actually set yourself up so that on the 29th of the month, which is what's that, 20 days away, 20 calendar days away, you close the position, and at that point in time, if we take it, if the volatility, which would be quite unlikely, was at the same level, then you've lost $470 or plus a couple of dollars, $600 from today to that point. So when I set the trade up, I know my risk is, and it's the 30th is the day that it reports, but my risk is that sort of $600. I'm not, yes, I'm using 2,600, and it could be more if volatility was to go down going into reporting season, and yeah, I take all of that, but it's quite a manageable amount of risk. If I go and buy a call option, my risk is, the total amount. If it moves against me quickly, I can lose the whole thing. So, you can manage your risk quite differently. And as a result, I'll generally, when I'm going to a long straddle, be using significantly larger amounts. I'll be calculating my risk based on time decay and a bit of volatility coming out of the trade. And then I can use a bigger amount of capital. So instead of where I might be, on a call option, happy to put sort of $3,000 or $4,000 of risk on, with a long straddle, I might be happy with 10 or so. For me, in particular, I'm not making a general rule on how people should trade it, but it just gives you the ability to look at it from that perspective. Now, is that
Patrick, I am sorry for being late.
Yeah.
Interesting times going on my side as well. So anyway.
Oh, don't worry. I just told everyone everything. It's okay.
Oh, okay. That's fine. Gotcha. Yeah. That's all right. If anyone wants to commit to my cause as well for helping be even better, but looks like we'll be fine. Anyway, interesting. So you're looking at buying some straddles ahead of reporting, huh? For ANZ.
Yeah, I'm looking at it actually. I'm going to price this up a little bit further and probably go and do this trade. I'm just going to play around with it. I'm not going to do it right now because I just need to do a little bit. I think it looks pretty good. Brian, who's online, I know you're already in this trade, and am I correct? Have you got this? Is it the 28th of May expiry day that you've got on, Brian, as well? but you're a 1650 28th of May, and you're a 1650 strike price, weren't you? Yeah, I believe I'm correct. Yeah. So yeah, I think I'll probably do this. Yeah, why not? Yeah.
So I was trying to find my mute button. So while replying to Tim, yeah. Look, this the interesting thing about that. Just the point of consideration though is obviously volatility is still high.
Yeah.
On the flip side, if you're thinking, okay, well it's high, and you know, the one thing to always remember at this point in time, just because for a lot of people they haven't seen these volatility conditions during the GFC, which we have to compare to. The market was doing exactly this. It was whipsawing all over the spot, and it was high volatility consistently. It then reduced, but it kept coming back up. So, for example, if you think about what will happen is, you know, the market, most amount of pain for everybody, right? They were saying the other week, the market is going to go through this period where it's going to try and consolidate, so that a bunch of retail people feel safe that it's a bottom, and everyone likes to pick a bottom, especially unsophisticated traders. And then what they'll do is the bigger institution type of traders, they'll take the market down. They've been happily selling throughout, and they'll make sure it goes lower. The only counter argument to that is if this is the bottom, that would have been done just purely through how much liquidity is provided by the central banks to the global markets to prop them up. So that's the only real sort of flip side to that possibility. So really, there's just going to be this war around people trying to unwind their positions, and you know, forced redemptions from super and all this kind of stuff versus free liquidity effectively from the market. So that's going to be the battle happening. But the kind of where markets have typically been, and what they've historically done is it's very unlikely. I'm going on the record here, but very unlikely that we've seen the bottom.
Yeah, and I mean, and I guess there's a bunch of scenarios that you can profit out of this trade. So is it possible that we go back up to $20? You know, in the next couple of weeks, it could fly up there. I mean, it's moving 4 or 5% a day without cracking a sweat, right?
I should probably just mention that where I was saying that was probably that there's a little bit of a, with where volatility is, you're effectively in a little bit of a you're actually taking more of a bearish view than a bullish view, because if it starts grinding up, unless it's a super fast move, you'd expect that volatility is going to start coming off.
Normally, but going into a reporting season, I would expect volatility to hold its ground.
Yeah.
So that's why I say I don't mind that trade.
Yeah. Especially since no one knows what the outcome is going to be in light of all this COVID stuff.
Yeah. So anyway, it's Paul's asked a question. How long do you think it might take to see the bottom, Ivan?
The answer to that question is once you see some real consolidation. I mean, this is a pause at the moment. It's not a consolidation. Maybe if you bring up the chart of the XJ, I'm not in front of my computer. But I'm looking at the phone. So that's sort of a consolidation. That's not a bounce. And the worst thing for bulls right now is that it's really the momentum has dropped on the buying pressure. So I think that it's until such time that it takes out the high, and then what you're effectively looking is the answer to your question lies in what it does around those 4,500 levels, as opposed to what it does around here. So the market, if I was trying to push the market, especially as volumes are kind of starting to stabilize a little bit compared to where they were in March, you'd push out the high, you'd take out all the stops, create a short squeeze, see how much momentum that has, and then you'd bring it back in, you'd smash it down straight after, and then you kind of, then suddenly all these people start covering their longs, and then they'll typically smash it back down to the bottom. And it's very important how this market reacts around those levels. And my guess is, based on the way that we saw the bottom, if it gets back down to those levels, which I think that it will, I just don't know when, but I think it will, then it's all about what it does there. And I think it'll take those out, and then you're effectively just in the same process where it's just going to continue going. And that's where you've just got to look at what it does and where does it start stabilizing. The other alternative is that if this is the bottom, then you just look for further consolidation. Typically these markets, you can't just go from super bullish to super bearish markets and not have something in between before it goes back to bullish. And even if the coronavirus goes out and there's a cure that comes out tomorrow and it's released to public and passes all approval, the amount of damage done to the business and to the economy, that's only going to start coming out in the earnings results, and that's going to be an impact over the next 6 months. So you're going to get these pretty violent swings where people go, oh, that's fine, we've cured, everyone's going back to work, but then you get these bad results where we find out exactly how bad some of these companies are.
Yeah.
And there's just decades.
Yeah.
Years and years, maybe not decades, but years of recovery, of strong growth to pay back the amount of debt that's going to get created in this. The only saving grace, to be a little bit more fundamental for the markets at the moment compared to the GFC, during the GFC, the markets the liquidity completely dried up. Banks weren't lending, LIBOR rates shot up, also some rigging, but they still shot up. Conditions tightened, the banks no longer wanted to go and trust each other, whereas now the governments are stimulating banks to lend and to continue pushing money down into the system. So at least now they're lending, they want to go and extend. The government obviously securing the loans all around the world for small businesses is a massive liquidity boost. So yeah, I guess that's a flip side to look at.
Paul said, what trades would you set up based on your prognosis, finding everything is so expensive with such high IV?
I think that the trades that we've been looking at are bear call trades at these levels. I think that are no different to that session that we had with Nathan Germain. We were talking about 5,500 being that potential level. I think that now it's not about time to look at revisiting some of those 5,500 bear call spreads, especially now that expiry is not too far away. It's 16th, so it's about 8 days away. I forget the day, it's 8 today or something. So yeah, now it's where vol's at. It's not a bad idea. As the market drops, I think that it's not a bad idea to look at bull put spreads. So effectively, it's legging into iron condors. And I think that at levels where IV is so high, you've got to be selling vol. And going back to my previous point in terms of vol standardizes at high levels and then bounces up, you've got to be very risk averse. You've got to literally be managing the worst case scenario and just trading small size, because the payoffs is great. You're getting, typically in an iron condor, for example, you're getting 3-to-1. At the moment, you're getting closer to 1-to-1 risk reward for half standard deviation 30 delta iron condors. You're in this amazing situation where you can go in and get some really good value out of these. So you might as well go in and say, instead of risking 3-to-1 and putting on say $5,000 a trade, you can put on $1,000 to $1,500 and get some really good outcomes out of that.
Yeah. I completely agree, and I think in a period, if your view is that we're going to see some more consolidation, it will change at some point in time. But if you can kind of scalp through having enough delta in your trade, you can scalp a bit of a move out of there, get some time decay at the same time, and move in and out of positions. I think it's the way to go at the moment, rather than sitting there and watching it go up and go down and go up and go down. You can sort of trade in and out the side of it. There's plenty of opportunities around that style over the last 2 or 3 weeks. Where vols were really high, it was still there, even though it's moved up. You could just go a lot wider, but now you're probably looking at 100 points above, 100 points below at the bottom of the range, something like that.
And that's still 1,000 points spread.
Yeah. Get it wrong one day. For now, that seems to be working very well.
Literally, it's all about risk mitigation. It's all about finding the appropriate time to do it. I just think that the market is, as I said, in middle of March, this is a perfect time for options traders. There's times when the market isn't good for options traders. There's good times for other traders. A very long, relentless move higher, especially in the back end of the bull run. Remember these sessions that we were running, Patrick, and we're just like, and there's nothing, let's move on. That was a good 10-minute webcast, still nothing.
Yeah.
We're waiting for something to, and it didn't happen. Whereas here, this is continuous trading opportunities coming up, really good risk rewards. You can really tighten up the amount that you're risking per trade and just get, 2-3 times what you normally get out of the market. I mean, if probabilities are still probabilities, the market at 120, 150% vols is ridiculous. Can the stock really go? I mean, 100% vol effectively means that there is a 68% chance over the next year of a underlying asset going to zero. That's what 100% vol means, or doubling. So, and then if you get stocks out at 150, you go, okay, well, what happens when the price goes to zero? That's what you're buying, or that's ultimately what you're selling when you're selling vol. So, yeah.
Yeah. Ron's asked, just curious what the trade order on STO at 463 is. Ivan, any ideas?
Sorry, I just got, there you go. Sorry, I've got, I didn't get back into the office. I was so keen to get back into this, into the session. You've just got order tickers coming through.
Yeah.
It's a collection of real orders and simulated orders, but I'm guessing most of the simulated orders there.
Yeah.
So you're in the admin screen.
Okay, I get what you're saying. Yeah, that's just an order going through. It'll be someone's private order, so I can't open it up.
Well, and again, it could be real or it might not, because you've got access to all the paper trading accounts as well.
Okay.
Yeah.
Yep. All right. Well, has anyone got any questions there? Any trades anyone wants to have a look at? Anyone want to offer any opinions on anything that's out there?
Are you still coming into my session tonight, Patrick?
Yes, I am.
Good.
I might be driving between Melbourne and Mornington Peninsula.
Right. So I take it I'll be doing most of the talking. Good. Well, it is my session, so that's fine.
Well, it's your session. You control the computer for us. I'll give you a hard time.
Fair enough. There's a bunch of people that are probably new to this this time around. I've invited a bunch of people from so professional having a son in the background. But anyway, there's a bunch of people that I've invited to the session this time around to get a bit of a glimpse of what we talk about in our trading sessions. For those of you that are there, thank you for coming. I don't have the list in front of me of who's attending, but I assume that there's some people. So thank you very much for coming. I've just probably spoken about what this group is. I've missed out on this in the first 20 minutes because we're stuck in a call, but we do these every week for the members that trade through implied volatility. We can go on and chat a bit more about that, Patrick.
Yeah, well, if any of those people are online that aren't clients can take a trial for 30 days, type in yes into the chat box or no when you leave the session and we'll get you set up. So that goes for anyone that's on the session that's currently a member. What we're doing is we are, and I would open this invitation up to everyone that's on the session tonight. So what we're doing is every Tuesday night, I'm trying to set it in as a standard thing in my diary, that either Ivan or myself will interview a trader. So we had Brian Corman, who we had join us on Tuesday and gave a great presentation. It was really well received. The feedback was awesome, and just spoke about how he trades and how he got into trading and why he trades. And then he showed his long straddle trading plan for trading into reporting season, which is relevant at the moment, so we've got some reporting coming up. And just showed the rules and how he goes about it and what he looks for and how he puts the trade together, and we had a bit of a chat about that. Next week, previous 2 weeks ago, we had Nathan Germain on the session who runs a fund and is a private trader and a professional trader, and he went through and explained how he goes about it, and that was a brilliant session as well. We had a hiatus the week between, and next week we've got Graham O'Brien from the ASX joining us, and we're going to target talking about market makers and a bit of a review on what's gone down over the last month and a bit in the options market, and give you guys the opportunity to ask some questions and also see what he's seeing on the ground. But beyond that, we want to have someone new coming through each week every Tuesday night and make that a regular. And we don't need to be a professional trader to join the session. We just need to be someone that trades, willing to share your story with a group of people and have a chat about how you go about doing it. And it's not, and I think from all of us, I love the sessions because I get to hear new ideas from someone else, and that I might be able to adopt within my own thinking. I might open my eyes up to an opportunity that I'm not seeing, or just be a refresh on the right ways of going about things. So if anyone's on the session and would like to share their story and have a little bit of and give a short presentation or discussion around how they trade, please put your name forward, and we'll run through with the structure of it, give you an opportunity. You don't need to put a lot of time into preparing, and it's just an organic conversation where we ask you some questions and you talk about what you do. So if you want to come along to those sessions, book in via a morning report. There will be, and once you book in, it books you into the series, so you'll just be invited back each week and the publisher will come and join you. Ivan will run it, will do one, I'll do one at some point in time, on how we got into trading and what we do and so forth. But we want this not to be us, we want it to be other people. So please, I know a lot of people on the session are experienced traders, and we'd love to hear your story, and give back to the community of people who are out there trading. That's really what it's about. All these sessions, and they're not targeted at people who are thinking that maybe one day they're going to trade and they're going to make a whole bunch of money out of trading and all that kind of stuff. They're targeted for people like us that trade. It's what we do. We look for trades each week. We trade it. We put our money in the market. We've got our rules. We understand what it's really about. And it's, just about sharing those stories and giving us more things to think about to help promote ourselves as a little community and to support each other. So please put forward anyone that's requested. You can join the session simply by, in the morning, you get our morning report. Just click in and register via the morning report. You can register that way, or you can pick it up off our website. That's the simplest way to get in on those sessions. But anyone who puts their name forward, please put your name forward, and at some point in time in the future, join us.
And just, Patrick, just for those guys that have come along from the session that are on Tuesday, if you want to start receiving the Reach Markets trading report, maybe you can just enroll those guys, because it's a pretty good report. It's put together by one of our traders on the desk, and it's a really good oversight around technicals and all that kind of stuff, and you get some pretty cool news in there that you put in from time to time as well. Yeah. So Reach Markets is the centre.
Hey, what, Wayne?
I was just saying that Reach Markets is a sender.
Yeah. Come from Reach. Yeah. Sorry, I thought you said it is in the centre. Beautiful. All right. Well, thank you for joining us today. We'll be back next Thursday. Hopefully there's a bit of action between now and then. Are you trading bear calls at the moment? I'm in a bear call where we sit now.
Yeah, well, if you remember, I put a pretty small one in, and it's a little bit offside today on the back of 100 points. I think it's a 50 strike, I think it was. You got 100 points higher than me, but I put in, as you remember, a pretty small trade. You actually put in I think you put in 5, I only put in 2 lots. So I'm looking for an opportunity. I'm interested to see what it does around here, but coming up to, especially maybe ahead of Easter today, because you get the weekend time decay. I'll see where I can find some stuff, and then I'll see if I can chuck a trade on. Yeah, just going to be, especially towards a close, just to have a bit of a look. It's just a bit weird here at this 5,300 level.
Yeah, I don't know. Yeah, I think you might be right. I was thinking mine is sort of sitting there quite nicely, but I'm thinking about rolling it out and up. Or I might just close it down and then wait. Where have we got XJO bear call? So Trudy was asking what levels. I'm in the 53, 25, 54, 25. Which I got 50 cents for.
So you got another. Well, wow, yeah. So you still way better. That's where the time decay comes in. So you're so that's interesting. The break even on that even at the moment is 53.60. So you'd be at about 53, 5400, right? 53.50, 5400 break even. I reckon I'm at about 5300 break even. Actually, no, I'd probably be just under. So I'd probably be about 20 points offside. So I expect to follow a little. But it's funny enough, I actually, with how much I put on, I wouldn't mind the market popping up a little bit here to get a bigger position on a bear call. It was sort of a no man's land, and I just wanted to get something on. It was a bit too far away for my liking. But just with these high vols, it's a good time to get some April 16s in there, and take a bit of an advantage from the market popping up.
So you can see that you're getting 40 cents. You would have got 50 cents for that in a like-for-like scenario a couple of weeks ago, just based on volatility going from probably 50s down to 35, something like that. But it's still, I still like the look of it. So something like that might do the job. It's going to come down to your view. Would you go higher, Ivan? Lower?
Well, right now, I'd like it to, again, see what it happens. I mean, the trade that I put on was, I just saw the market capitulating, and it did. I think it dropped about 100 points 15 minutes after I put it on. But at this point in time, I'd be interested to see what it does a little bit around here. I'd like it to be a little bit higher and go for sort of a 5,500, just a little bit more out of the money. Because I think it'll be interesting actually, 5,500, 55.50. Can you price that one up?
5,500, 55.50.
Yeah, and also you're looking at a weekly. Can you price up just do it on a 16th of April when the expiry is? Learn the button, yay! Yeah, so that's what about okay, that's probably not quite where I'd like it to be. Good old vol, not quite amazing. I would have liked that to be a little bit higher, but so you probably needed to be around about 5,400 for that to make sense.
Yeah. So Trudy was looking at 54. Right, so 16th, you're getting 41. Yeah.
So that's 41 expiring in 8 days, 40 points away. Okay, that's 40 points away being the break even, sort of enough money. It's not too bad. It's obviously it's pretty body like that kind of trade. 2 weeks ago, 3 weeks ago would have been worth about 60, 70 points.
Yeah.
They're obviously balls coming off a little bit. But 42 points for something right about here is not too bad. Especially if you're of the view that the market isn't going to have a fake out to the upside, as we like to say. But it'd just be interesting to see what it does. I obviously, being in a bear call, I'm not going to go rush into it. But yeah.
All right, Nigel. I think it's consolidated. Bull put at bear call. I missed Tuesday. I'm pretty sure it's recorded. I'll have a look. Thanks, Nige. So yeah, thanks for your message, Nige. Paul said I can't see it in the morning report. Is that the booking or the recording, Paul? If it's not in the recording section, it should have been, and I'll make sure it is in there tomorrow. All right. So if you check tomorrow morning at your morning report, oh no, you can't tomorrow. It's Easter or whatever or whatever it is this year. but Easter Friday. So it'll be there Tuesday. Yeah, you can book in for Tuesday. You can book in for Tuesday. It should be the first thing that's in there. Yeah.
I booked a bunch of, I started booking a bunch of meetings for Friday, completely oblivious to what day it was, of what week it was. It's so weird this year, isn't it? I'm like, yeah, let's just catch up on Friday for a phone call. They're like, oh, well, actually, I know that we're still sitting at home, but I kind of don't want to be working. Like, oh, damn it. Whoops. And then about 15 minutes later, did the same thing.
Yeah, I'll be working. Well, let's call it for today. Better keep trucking. Thank you very much for everyone attending. We'll see you next week. Next Tuesday night, we've got Graham O'Brien from the ASX. Join us for that. Good luck with your trades, and catch you later, Ivan.
And catch you tonight, and some of you that are coming to our little catch up to see you guys too.
Beautiful. See ya.
Thank you. Bye.
Happy Easter, everyone.